Hey everybody, it's CRYPTOBIRB, Adrian speaking. Welcome to today's webinar, Friday's webinar. Time flies so fast. Time flies so fast, but does it really matter and does it really mean in financial markets, which were going for the entire time recently in ranges and either in ranges or in downside, sort of like patterns. Well, I'm here to discuss for you guys today. Go for a couple of charts, a couple of different time frames for many different markets. We're going to go and discuss the potential outcomes, potential outlooks for the crypto, for Bitcoin in specific, to be specific, for equities, for bonds, commodities also, and you guys are going to get a full picture to better understand what's potentially ahead coming for the markets in the next months. If you guys are ready for the ride, make sure you stay tuned. We are going there right in a moment. Beautiful. Yeah, welcome everybody. Let me know where you're riding from. Where you're riding from. So many beautiful comments. Starting off, Karen Carden saying hi, Adrian. God bless you. God bless you too, Karen. Amazing. Zorientowany. Hej, Adrian. Dobrze cię w końcu widzieć i słyszeć. Cześć. Hi to everybody. Listen, I think there's a lot to be discussed, to be honest. A lot to be discussed in terms of the markets, and a lot to be discussed in terms of, well, what potentially may be coming ahead for everything that is out there, right? And I just want to make sure, because of course there are so many points to be discussed. To start with, that you are feeling okay today. Let me know where you're writing from. I can see Turkey, beautiful. I hope you guys eventually manage to adopt Bitcoin out there on the official basis. Huge fan for you guys. Dublin, Ireland, beautiful. London, Chats. I've just recorded the podcast with Chats. That's stuff. It's coming out tomorrow. Um, yeah, I mean, here in Poland, the weather actually has been quite ugly past couple days. I hope it's better where you're at. Many Polish people actually suffer often from depression, mainly because of the weather. It's crazy, as crazy as it sounds. It's a huge burden. There's a lot of gray. There's a lot of gray, similar weather to what you see actually in UK. We have Wales, beautiful. We have people from London, India, Belgium, Nigeria, France, bonjour, Holland, Belgium. Fun fact before we go, and I'll start off with the chart. Um, Whenever I say I'm from Poland, many people take it as Holland, as Netherlands, right? So this is a bit tricky for many people to understand. So this is only one letter like difference. Singapore, Romania, sunny south of France, beautiful. Miami, oh Jesus, Dubai, beautiful. There's so many beautiful places. I envy the weather. I envy guys, and I hope you are having such a great time on today's Friday. Time and through the next, well, 50 minutes, 55 minutes, that is the approximate length of what we're going to have today. I'm going to do my best to get you guys quite a full picture, right? Quite a full picture. You cannot really get a full picture of Bitcoin without having and analyzing what's going on the other markets, right? The markets are connected, every single market, unless of course there are no embargoes or like trading barriers on the legal side, regulatory side. Every market should be connected to an extent. Some markets are more strongly correlated, the other ones are close to zero in terms of the correlation. They are not correlated at all, as it may seem. But eventually, when the time comes, when there is a price shock, when there is a case, for example, of Russia invading or threatening to invade Ukraine, which I think, by the way, is kind of like a media trick. Like if you want to go on war, you don't really announce it to the entire world before you actually do, right? So the way I look at it, it's supposed to be saying something. We do that. We have the law in Poland as well, coming off the politicians. This is the way that they communicate, apparently. But more importantly, This message definitely disrupted markets out there, right? This message disrupted markets to a quite a major extent. We are seeing insane amount of fear in crypto. We are seeing insane amount of fear in the equities, right? And no surprise. It's not really surprising because the markets have been, quite aggressively declining. We are talking about Robinhood being, I think, 90% down of its highs. We are talking about uh, Netflix being down 50% approximately. Those are huge, huge dumps. We're not talking about like some casual days where you see like 5% price action to the downside or something like that. We are talking about something that is quite exceptional, and arguably, I should say, the most exceptional case, outstanding case in the markets ever since the COVID crash, or even as some indicators would show from and since crash in 2008, financial crisis, right, Great Recession. So it is wild. It is really wild these days, and you see that in crypto, you see that in the stock market. Uh, it's been wild couple of months, past days. Now, past weeks, past months, as like I said, past days. It's been a wild ride, uh, and we can actually just give it a check to start with what you're seeing. Okay, 1 second. Just let me fix the screen. There was some. Uh, okay, there is some issue apparently for some reason. I have no idea why just yet, but let me actually just fix it very fast. Um, Let me make sure to know what's up, why it's flashing out this way. Okay, basically it should disappear to some extent. Yeah, sorry about that. It happens, you know. Uh, to start with, I want to give a check. This is a tweet that I literally noticed earlier today, coming from Barry Silbert of Grayscale. Um, and well, what it basically says is that, the way that it works is you have Russia-Ukraine conflict, which actually spikes the prices in the energy sector. Then you're looking at higher inflation. Not many people could actually know. Uh, not many people would know that higher inflation is a result. It is not necessarily a kind of like a, I should say, issue on its own. You usually are looking at higher inflation coming off of the higher prices of the commodities, right? As crazy as it sounds, high commodity prices, high mining prices, on the equity side, usually uh, gets you to high commodity prices, as in crude oil, just like you recently saw, right? So, by the way, let me know very quick if you can hear me. It's sharing. What the hell? That's super strange. That's super strange. Uh, it should be streaming directly. I think there is some issue with the plugin. Yeah, so that's what I'm talking about, right? Uh, it somehow glitched a bit. Um, but okay, I was afraid it literally froze for a moment. Super strange. We'll need to have a look at it this way potentially. Uh, well, let's have a look. I hope it works this time. There's like I said, a tweet from Barry Silver. Excuse that before. There is a tweet from Barry Silbert saying, Russia-Ukraine conflict leads to spike in energy prices, which leads to higher inflation, which leads to global recession, eventually as a natural way that the things work in the markets. And then it comes for the financial repricing. I hope you can see the tweet and flight to quality. Right. This is a typical cycle that cycle implications that may come as potential outcome, as potential outcome for, well, something as innocent as as it may seem, well, as the Russia-Ukraine conflict. Uh, True or not, be it true or false, uh, we are looking at something that, well, has brought a lot of fear past days. We are talking about the crash that eventually, well, had its anchor at the, well, on the Evergrande news day, right? If you remember, there was a time when Bitcoin was actually hitting the all-time high at $69,000. And this was the time, the perfect time of the release of the news of Evergrande, having a lot of struggles with paying out the debts and all the liabilities, that they were having at the edge of the collapse of this, well, huge hegemon company. And ever since then, the markets have been in a turmoil. The markets have been trending down. Well, I should say either in a wide range or in local short-term downwards trend, short to medium-term downwards trend. By definition, anything that takes between 3 weeks and 3 months, okay, gives you a scope of a medium time frame. Anything longer outside 3 months is basically high time frame, right? Anything lower than 3 weeks, shorter than 3 weeks, is supposed to be short-term time frame. So having classified that under the category of the medium time frame movements, right? We are talking about short, medium time frame downwards, follow the cliff kind of like moves on the equities. Like I'm just going to give it a quick run through all of these markets in a second. But does this really mean that it is some sort of like, proper bear market, right? And I'm referring to crypto, I'm referring to equities, I'm referring to like anything out there in terms of the financial markets. And not necessarily, if you think about it, right? Let's give it a quick check then. Well, starting off with the major markets, right? Per the industrials, Dow Jones Industrials, you can tell that basically we have been looking at quite a strong, well, decrease and literally just slide right beneath, or like quite heavily beneath, I should say. It's, well, the red moving average, which is 200-day moving average. It's quite below 200-day moving average. It's an exceptional case, right? In December, when there was the first case, coming off of the Evergrande kind of like timing, you can tell that it was not only Bitcoin that hit all-time highs and then reversed. We were talking about all-time highs on the equities, on the industry, and the industry as a whole per this index. Throughout around this time that that Evergrande news came out. Media usually take news pieces out there with strong headlines, with a lot of fear-inducing headlines or greed-inducing headlines to manipulate the markets. This is the way it works. This is the way it's always worked for Bitcoin. This is the way it's always worked for the mainstream media, basically, right? But we've been looking at quite an extensive, fall of a cliff kind of like a movement. It literally smashed through the previous region of supports, if you will, right? We were looking at the support previously in there, like then October lows, then the December lows after following the Evergrande collapse, like on the short-term basis. We were looking at with a lot of weakness, some gaps, some were coming up, some were here on the trading side, and finally, after the Fed's Fed's day, right? You were having a lot of volatility, bottomish volatility. A lot of indices or a lot of stocks actually start turning back up from these regions. And if we have a look, this is the industrials, but if we have a look at the composite index, right? Then you can tell it actually took even larger hit. It took even larger hit. While Dow Jones Industrials were actually, just again having some higher, high at the end at the early days of November, it actually pulled, a lower high, and then at this time, the same time, composites, composite index on the Nasdaq side, tech, was having at that time, higher highs, right? So high followed by higher high. So this was typically some sort of like a divergence, between the industrials, between the composite, where you are seeing, this kind of like deterioration in the direction, which is too often significant, right? S&P 500, you can tell it's also right down beneath 44, 45 approximately, beneath the 200-day moving average. You can tell, well, DAX is below as well, right? You can tell as well the French CAC 40, well, remaining relatively stronger, right? As all of these indices throughout that we've just checked, we're kind of like literally breaching after having breached, through 200-day moving average. We are looking at relative strength of the French economy or index. Well, not necessarily economy per se, because this is an index of 40, 40, top caps out there. DAX. What else do we have in terms of in terms of Nasdaq, back for a moment to Nasdaq part. You are seeing potentially some form of basing pattern locally, right? Local sideways. You can tell the market is not trending down; it's actually trading sideways locally. Well, you're literally looking at some long series of long wicked, long bars on to the downside, closing above the open, which is sort of like typical hammerish bullish potential reversal patterns. While that having that in look, we can be looking as well at at the ETFs. Let's have a look at the energy sector, right? ETFs of the energy sector are clearly printing the new highs, right? So whenever the conflict between Russia and Ukraine kind of like started, you are seeing the new highs being printed quite aggressively on the energy sector, right? I'm going to also discuss it briefly in a moment in the broader context for the entire commodity, entire commodity kind of like part. But if we have a look again at the consumer discretionary down heavily, right? Consumer staples, well, a bit safer bet, right? Quite well along above now 200-day average. This is a strong anchor. 200-day moving average is quite a strong anchor. You want to be looking at this as a long-term moving average, long-term fair price, right? Energy, like I said, high, healthcare down, industrials, down, even printing new lows. If you have a look at this ETF, XLI, technology, right? Technology, as we are looking at it, Apple has been having some sort of like a decent, bounce off of the lows, which definitely, has some reflection overall in the overall local recovery for how the tech, takes it. Of course, there's some limited weight or weighted input of certain stocks towards the ETFs, because every ETF would have a different basket of stocks in general, or different exposure, to different other assets, whatever ETF you're looking at. Real estate. If we have a look at real estate, XLRE, we are talking about quite a heavy push down, right? Quite a heavy drop, while trying to find the base. So far has been finding the base somewhere around 200 moving average. So it's pulled back. It's thrown back to the levels, unseen since, if you have a look back in the history, basically, October, right? So it's quite an exceptionally strong move to the downside for many sectors, except for energy, right? So energy and the commodities have been showing relatively lots of strength. If we have a look, perhaps very quick at the gold mines, gold and silver index, um, you are looking, local to the local on the local downside day here, quite potential volume, if you will. Um, then moving on, if we want to have a look at the at bonds, of course we are looking, we were looking at quite a decrease, in the bond prices, uh, which is usually related to increasing yields. Uh, if you have a look, we're going to actually give it a deeper discussion, right in a second. But just kind of like giving a quick outlook out here. I think 10-year Treasury notes, yields hovering around 1.85, 1.8. Uh, this is far, I think, from the historical levels, but bonds, bonds have been aware in the bull market for quite a long time. I think ever since 1980s, if I'm not mistaken, long time. And this long time might have seen some sort of like reversal recently. That is definitely important to be having a look at it. Gold is taking a price also on the ETF side, taking a hit on the price side. Well, CRB, as the Commodity Research Bureau Index, is actually piling up, right? Because it definitely has a lot of weight towards the energy sector. Whenever the energy sector just pumps in heavily, CRB would follow that closely. We're going to have a comparison with the BCOM as in Bloomberg Commodity Index in a moment. But silver has been taking similar hit with a rejection of 200-day MA as well. Uh, and well, gold continuous contract anode day, just like we are looking at some uh, local, breach beneath 200, well, 1800s beneath 200-day MA. You can tell there's been quite a congestion. Recently there's been quite a congestion. Uh, and not much of deterioration, not much of bandwidth distance between one MA and another, as in, well, the shorter term moving average and the longer term moving average, which means that we've been basically oscillating around very similar levels for quite a long period of time, right? This is definitely something to to understand and to perhaps have a look at it in terms of compressing volatility, right? Every compression of the volatility eventually leads to expansion of volatility as the market pulsates, right? It never remains, or it rarely ever remains on, like, basically provided that it's dead. Uh, but unless it's dead, it rarely ever remains compressed for a long period of time. Every period of compression in volatility leads to volatility expansion eventually in the breakout. And Bitcoin, of course, like having it actually open right now, we are seeing quite mixed feelings upon, USD pairs. Bitcoin, tiny bit, like 0.59 percent down at this very moment. Ethereum 0.74% upwards. 74% upwards. Sorry, excuse that. So Ethereum is gaining tiny bit again, strength against Bitcoin, which is some sort of a positive sign if I were to comment on it. Rest, I definitely do not like when hitting, $1,100. This is quite a heavy bet. I was actually, I was seeing these comments, of course, about Litecoin. I keep explaining Litecoin pretty much every week, right? But the full explanation, if you want to have it, I before I hopped live on this show, I literally spent uh, almost entire hour talking to big chats on the new episode of the Nestro podcast, which is going to be out tomorrow. So keep your eyes open and stay tuned for the release tomorrow, where we discussed quite a long, for quite a long time, this Litecoin bet that we had. So this is going to be a main reference for it. And on top of that, I recently and solved it a couple of times, right? But if the time allows, we're going to have a quick look through it as well. Well, on the currencies, the dollar has been relatively strong over the course of the past couple of days. It is a bit surprising, though, right? It is a bit surprising. If you have a look, the dollar is literally smashing or breaking, out of this sort of like faded breakdown, right? So a lot of strength is coming on the dollar side, which typically means a lot of weakness for Bitcoin, which we're going to discuss more broadly in a second too, right? VIX, you can tell VIX per the volatility index as an implied volatility ahead of 30 days of what is going to happen according to investors in 30 days. You can tell that there's elevated fear in the market, elevated fear which comes from a bigger amount of put options being open for S&P 500, the expectations of people for the 30 days ahead period are pretty negative, right? Which piles up on a fear side, which piles up on a VIX side. So if you are playing futures, you could have made a lot of money there. Put and call ratio, right? You can tell the put and call ratio actually, took quite a uh, well, took quite a decrease versus a couple of days ago. Uh, we're looking at downright from 1.25, where you would have a lot of pull. Basically, fifth 5/4, of the amount of the call ratio. Call ratios, for the options as a total. So it's kind of like tiny bit of you can tell that in the VIX as well, that it's slightly just gone down a bit, but it's still nowhere near the levels before that, right? We're talking about levels seen even higher than during the Evergrande news, kind of like coming up and of um ahead of the December's kind of like just um discussions about the rate hikes and the proper plans. Uh, and I think of the market overview, that's pretty much it. So we are basically seeing a lot of weakness over the course of the past 2-3 months across many different sectors. Majority of these sectors, majority of the financial markets, if you will, um, be it for the different stock sectors, stock groups, um, tech taking quite a hit. Overall, there's been a lot of risk of environment coming with the fears of the rate hikes, which a couple of days ago, very freshly, literally were appearing that it was not really enough reason to be fearing this much in the hindsight, because the Fed's press release with Jay Powell ahead, were coming out with basically nothing. Right? I was sitting and watching that live for like an hour and a half in total, I think, uh, and they literally said nothing, right? So if you if you can talk about nothing and make it seem to the people that it is smart, you can apply and go for to become a politician, if you will. Um, but then what are we looking at, right? This is a chart. This is a proper chart of well couple of averages, if you will. Right, here's the golden one. It is a futures for GSCI, which is Goldman Sachs Commodity Index. This represents the overall commodity index as a whole, right? With a bit different weights assigned to it. You are looking also at the black ones as a 10-year-old treasury, 10-year treasury bill notes out there, hovering around 1.78%, just like we were discussing it before a second, as well for the bond side and the bond prices, right? Of course, there is a like negative correlation between the bond prices and the yield. So anytime that the yields kind of like top out, the bond prices bottom out, etc., and vice versa. But you can tell at the same time that there's been basically a lot of growth and nothing but growth ever since the COVID crash happened, and you will see insane amount of money piles to be printed out there. And it is usually because increasing inflation, right? Increasing in inflation, followed by it, of course, a lot of money prints. For the reminder side note, about 30 to 40%, I think it was closer to 30% of ever printed money were actually printed in 2020, right? So we're talking about unprecedented cases. And these unprecedented cases have elevated the prices of commodities very, very heavily. And what does that tell? Well, this tells you that whenever there's highly inflationary environment with the chances of slowing down inflation, which is potentially what we are seeing right now, uh, aside from, of course, outside for what was mentioned in short term by the Fed's press release, on the Fed's press release, they're basically going to revise, all the plans and review their takes in terms of the balance sheet runoffs, um, in terms of the takes and plans for an actual rate hikes. So far, they are taking the time, right? They're not really rushing. They were not really much details or concrete in terms of the numbers. No numbers basically almost appeared. And slowing down inflation, if they want to slow down inflation, which is of course which has got out of the hands unquestionably, 7-8% in Poland. It was 8.6% in December, as far as I'm concerned, if I remember correctly. We're talking about inflation basically being 300% of what it's supposed to be, right? So it is far, or even 400%, is far beyond any healthy conditions, as they would call that, for the economy to grow. So slowing down inflation with the rate hikes potentially, of course, they cannot really do that like in a very, very aggressive manner, because they risk deflationary crash. They risk repetition of what happened in the Great Depression of 2000 of 1929 through 1932, right, where there was a proper deflationary crash. There was a failed, fierce and kind of like nearly devastating outcomes of the dot-com bubble, 1999, 98 through 2001, where they risk that a lot, and they do their best to learn of the mistakes. And if they kind of like were very aggressive with this amount of money ever printed, with this amount of well, overall, I should say, um, emergency going on across the board, with across the world, with the pandemic, and beyond that, they risk pretty much. They risk pretty much in terms of the economic stability, in terms of the security stability, right? So to avoid any domestic wars, to avoid any repetition of people literally losing the money of their lifetime savings, uh, currencies becoming worthless. There are so many pieces that they have to somehow merge together to fix it, that they need to take it very slowly in terms of the rate hikes. Uh, I was actually expecting, a couple of months ago, I was actually expecting, them mainly putting on the fear button, pressing the fear button, so that people fear of the rate hikes much more than they would actually raise it. But if they are to raise it, starting off March 2022, uh, 3 to 4 times they said they could do it, potentially quarterly or so, then this doesn't really seem to be very aggressive at all, right? Some minor percentage points increases, and this is an environment that empowers commodities, right? Which additionally, literally has been for the entire time, just like I was saying, the stocks were kind of like coming down, you know, stocks were coming down. And usually stocks and bonds, well, not always, but they used to be very strongly correlated. Now the correlation is kind of like a tiny bit different. But well, while the stock market was collapsing, commodities were heading higher. And what does that mean? Well, if we are to focus, actually, let's launch the chart. If we are to focus on it, uh, on the broader, very broad context, right? If you're looking, well, this is a futures for Bloomberg Commodity Index, BCOM, right? If we are to take at the BCOM index, let's say percentages, right? Perhaps some of you may have not seen that. Uh, I think there was a decent graphic, I think this was that one, where you were looking at, uh, well, let's have a look here. Like we were looking at quite a heavy exposure to energy sector, to grains, to the food market, to industrial metals and precious metals, right? You can tell that metals actually come for about 34-35%. This was some 2021 target weight. So it's sort of like out to date tiny bit. But we are talking about metals being, having the upper hand, right? Metals standing for about 34%, especially the precious metals with 19% of the weight in the index. With soft and livestock aside, standing for 12% merged all together. Energy, grains, and metals, okay, is what actually just constructs this index based on the weights, with the biggest weight put towards metals. So the BCOM index, the Bloomberg Commodity Index, which is something that I've been watching ever since a year ago, since February's breakout a year ago. Well, this represents you to show the amount of growth on the energy side, okay, which comes, of course, from the crude oil, from natural gas mainly, and also from the metals side, right, and food market on top of that. Unquestionable growth ever since the crash COVID on the COVID side. It's barely even stopped for a moment, right? It's literally smashed the new highs already, and I was getting interested in it. I think it was literally early February last year because of this very breakout candle, right? This very breakout candle brought this insane long-term confirmation with a quite a power because there was a gap right above this. So a definite breakout power, strong power of the breakout. A lot of momentum going on in there as the market was breaking through its 50-month moving average. 50 months, okay, it's basically 4 or 5 years of time. So 4 or 5 years value of the index, okay, was actually being breached by the actual index out there, by the commodity index, which was basically implying that the commodities are growing way faster and are way stronger back then than their average performance over the longer period of time. And ever since then, I've been watching that. I've been getting and adding more exposure to gold, to metals, to gold, to silver, especially, right? Um, this, well, this is good not only because I think of the diversification value that the gold, for example, brings, as a store of value to start with, as a relatively stable asset, minimizing the risks that your portfolio overall has and the volatility that it has. The returns over the portfolio are not everything. Usually, while you want to have some sort of like sharp ratio approach where you discount the volatility, right? Where you normalize it with the volatility, risk risk adjusted returns. This is what you care about. Risk adjusted returns, which means that it's not only returns, it's also risks. If you have a lot of returns but a lot of risks in terms of volatility, for example, standard deviations, right, or the ATR, average true range, this really doesn't really place you in a safe bet. You can get a lot of exposure and can get a lot of profits, but if you have a lot of risk on your hand, a lot of volatility, you're quite bound to lose that profits and lose this upper hand anytime soon. So, portfolio diversification with gold, I see that question many times. Many people asking this question many times in terms of what would you choose, right? Gold or Bitcoin? Why don't you choose both of them, for example, right? In a 50-50 split, you're going to have exposure to both and at the same time have less risk compared over when you would have, for example, with Bitcoin. As last year has shown, 200-day moving average for Bitcoin is basically flat or smoothly ascending and upsloping. The performance of Bitcoin is basically, making four circles and goes all around in circles, swinging back and forth between 30, 60, $70,000 approximately, if you will. So Bitcoin's performance has been flat, right? But it was very volatile. And well, the demand for metals, the demand for energy is exactly what you're seeing in here. And we are talking about an overall increase of 80 points, all the way up to 100 points, which is basically 5/5. Again, 25% increase, a 5/4, 25% increase approximately, or even stronger than this. This is a fair push. This is a fair push over a year, right? Literally, I was after seeing this candle. I think it was November. Coming again also with the Evergrande News Times. You are seeing this quite a bullet bearish engulfing candle. I was sort of like expecting in the short term, while being a gigabull, for the macro view. I was expecting tiny bit of short-term deterioration, perhaps to the downside, a bit of relief, and then push back through to the upside. But god damn, I mean, this is huge bump already. This is a very strong movement ahead as we are heading into the end of the month, right? Very, very strong push. And I'm saying I'm a giga bull ever since February, literally since this very breakout, right? February 2021. Uh, this hadn't happened before, right? The last time that such a breakout happened in the same direction was basically here, right? We were talking about 2012, and then eventually it was in the bear market on the commodities side. It was in the bear market locally, at least. 2011 peaks on golds and silver with the all-time highs previously as well. But eventually, the last time that strength was shown was fairly between 2010 and 2012. So we're talking about a case that hadn't happened before it did for 10 to 12 years approximately. This is unprecedented case. So very clear signal of strength. And ever since I was busy accumulating gold, silver, and diversifying into hard assets, right? The food's prices, man, if you are not living under the rock, food's prices have shot up insanely, right? We're talking about huge food prices increases. And this is all showing it as approximate 25% of an increase ascent, versus its mean, versus the average, right? Uh, I was also fairly discussing like previously on the composite index. Like I said, you're seeing quite a strong breach, beneath 200 day moving out 200 week moving average. This is basically weekly chart. With RSI being nowhere near oversold just yet, volatility smashing, actually through the previous highest territory of of 600 points out there. Uh, we are way above. We're way above. Above regular volatility, we are seeing abnormal volatility to the downside. Very powerful breakdown. Okay, so this can take some time actually until the tech, as the composite index here, just recovers a bit. S&P 500 for the large cap index, it's sitting right now in this sort of like supportish area in the lows of October and then previously of July, approximately, right? So it's sitting in this lows area. If somebody asked me to short this, I would say no, right? I would, like, you may want to short this if anything, but then you at least wait for the mean reversion sort of like process, provided that again there is no Fed follow through beneath, which would of course look very bad on the politicians, on the Congress people, and on the Fed, on the country rulers. They cannot really allow this to for the stock market to crash, because this would put their entire elections and votes on this side, on the questions, right, with the question mark. So I would probably expect some sort of like a bottoming process. It may take some time, take some weeks, until it actually does. But then some mean reversion play potentially, ahead of 4,600 points, kind of like pull back into this region. This can get some short or medium term implications, potentially, as we are heading into the March rate hikes decisions with Fed's announcements. This may potentially bring some ease as well to Bitcoin, right? We also have, just like for reference, I was literally discussing this chart, right? Netflix. If you have a look, this is a huge gap right there. I think that Netflix was also, at that time, bringing the higher pricings for the subscription. So it additionally empowered the downside. Look at this volume, right? Look at its volume. The sell of volume, insane strength of the breakdown in here. Huge gap. I think it is about 15-20% gap, literally from 510 down to 410. It is massive gap. The gaps tend to get filled and closed more often than not. So potentially, I don't know when, I have no idea when, but perhaps after some bottoming process, it's a heavily discounted, high cap, stock, relatively, of course, after some bottoming process, perhaps closing and filling the gap into this region of the 500s, low 500s, high 400s could be some mean reversion play, along with the S&P 500 recovery. This overall could provide some ease for Bitcoin, just like I said. Right? Bitcoin is a risk-on environment. It shows you the speculative approach and how speculative people want to get. And because it's very well, it's very volatile. It's hugely volatile. 50% down also in the matter of the past 2 months, similarly as Netflix, right? Uh, well, whenever there is a basing pattern and back to the risk on mode, which slightly may also be correlated and significant with this significant local breakdown of gold locally, right? Then I could potentially see, again, provided charts. I'm basing that on the charts, right? Charts don't tell you when Elon Musk tweets about Bitcoin from his golden throat on the toilet, or whenever the Russia Ukraine just kind of like conflict emerges. There were literally recently just missiles shot, I think, at Abu Dhabi, aiming Abu Dhabi, right? So UAE. That's unless anything like that happens, that you cannot predict with charts. Unless anything like that happens, then I could see some bottoming, for the stocks, for Bitcoin as well, at least for the short-term gameplay to the upside, right? At least to pull back to this pre mean reversion levels of 250-day moving averages on stocks, which could potentially again mean some potential case for recovery into the $50,000 region for Bitcoin. You can tell that ever since mid 2020, right? Bitcoin has been strongly correlated, usually on the negative side, as in negatively correlated, which means inverse directions with gold, right? Ever since August, since this time, gold has been practically, was going down, Bitcoin was running up. Whenever Bitcoin peaked out there, gold bottomed. Whenever Bitcoin bottomed approximately, Bitcoin was bottoming, gold was also sort of like locally at the highs areas. Then this happens at times to get back on the track with the positive correlation. The correlations between assets are not static, they are dynamic, and every single price chart, just like Russia-Ukraine conflict, or regardless of what it really is, the way that the media just manipulates it and manipulates the information just makes these inversions on the correlation side. So, but recently, back a couple of weeks, you were ever since again this November December periods of 2021, you were seeing gold rallying up and Bitcoin heading down, right, heading south. And right now, if this short to medium term, actually past 2 months is medium term once again, correlation is to be secured, is to be maintained, we are looking at gold smashing down, which means potentially capital might be getting, selling off gold or choosing, aside from the dollar strength, choosing a bit more of a risk on environment somehow. Dollar strength maybe arguing that a bit, but trusting this correlation over the course of past weeks. If gold is taken ahead to the downside, perhaps it may mean some inversion for Bitcoin, right? And here is a long-term comparison between the dollar and Bitcoin, dollar strength and Bitcoin. Basically, major peaks and bottoms, were usually happening, were usually happening in tandem. Whenever Bitcoin peaked, the dollar bottomed approximately, and the other way around, right? A strong bottom as well, strong bottom coming up here. Let me actually just approximate it with the rectangles out there, right? You can tell that this, whenever Bitcoin was peaking, the dollar was basically having some sort of like a bigger bottom formation, right? Right now it's back in the negative, correlation, back trading inversely. What does that mean for Bitcoin? Again, if we apply some more short-term magic, right? Some short-term magic in terms of the tools, technical analysis. Well, this is a Burbicular Pro applied, my personal trading system and trading indicator that I use. Burbicular Pro, it actually just has the variety of tools, of course. The simplicity of my take here's taken from the CTF trailer. CTF trailer actually shows you the trend and the direction of the markets. It is a very smart indicator, one of many in this system, that basically got this huge warning coming out. Well, in the hindsight, if you look back, after breaching for $62,000, and ever since we've remained all the way down, unbreached. There were several attempts with their, breaching through this counter trailer to reverse the trend. But then the rejections came in, of course, a lot of fundamental noise came in outside, and every single breakout attempt was humiliated, was eventually faded, right? Even here. And we are talking about the levels. We're talking about the level that is basically at the stop, CTF trailer stop, that tells you that 4365, 4365, 40365 is the main level based on a 12-hour chart that literally once broken. If you see a daily or better weekly close through this level, right, this would technically reverse and end and provide confirmation for the end of the past 2-month lasting corrective period, right? So because it has been rejected so many times before, the final breakthrough and claim above and reclaim above as and close above, close the weekly candle above, monthly even better, through this level, it neutralizes the entire bearish effect that the bears have had ever since, topping out around $64,000 back then in November. And of course, like I was mentioning, you're seeing this Dartmouth candle, both sided, longs and shorts liquidated on both sides, literally, just taking local volatility out, knocking it out, like stops taken on the short side, stops taken on the long side. Ever since then, right? Ever since this Evergrande news, this was the news to the day, to the minute, to the hour. So there's not much coincidence, I think. You're literally looking at this bearish. It's not, of course, price action would tell you imply this is a bearish trend. Medium term, yes, it is. Long term, as you guys know, I'm referring to it as a long-term range bound fractal because it eventually is a sideways pattern, right? It is large, huge sideways box, ranging from approximately 30, practically 2880, 800, but 30, approximately 30 to $70,000. And this is the main narrative. The main narrative has been sideways ever since, right? And then we are looking at this medium-term correction lasting for the past 2 months, right, or so. That basically gives you the level to invalidate that once broken through and reclaimed on a weekly time frame is going to get you through, more relief, right? So this is what I could see also happening if this stocks market actually provides the risk on environment back on the table. If there is no external fundamental like fears, news, some changes in a game, rapid changes, unexpected changes from the Fed side, some military emergencies, conflicts, Elon Musk tweeting about whatever Bitcoin. So unless something like that happens, we are potentially looking at the bottoming pattern, right? Whether it's a bottom or not, of course, it's all going to be obvious only in the hindsight after some time flies. But as long as we move back inside this range, and as long as we hold, this local orange area of the VWAP, this VWAP block, a volume weighted average price based level, this supports potentially the market heading higher tiny bit to the upper levels, right? And potentially giving it more exposure and chances to breach this CTF trailer stop level, which would potentially then later to expansion, like aligned potentially with the stock's recovery, right? So if I was looking at it again, like from the volatility point of view, right, we're looking, or even from the baseline as the moving average, we're looking at the volatility that is basically, that was oversold. The volatility was tapped on the bottom range of the volatility. The regular volatility was their hit. We are somewhere in the middle right now. It's quite a lot of range because the main narrative of a weekly chart of the past year, entire year 2021 has been sideways. This is the main narrative, right? So for the most of the time, you actually see sideways, short-term downtrend, sideways, lasting through the entirety of this move until the breakdown. Another sideways, actually, this is one big sideways there, short-term breakdown. So you can see there's a lot of like this stairway kind of like down. um, the retail capital is liquidated already so long ago, right? So we are looking, it seems that the Bitcoin is kind of like missing only that it's having this potential reversal setup. And provided that there is no like disruption on the financial side from the unexpected news, unpredicted news, it may seem that, well, we might be looking at some sort of like potential reversal patterns out there, right? Listen, everybody. I've been talking for the past 55 minutes. We have about 3, 4, 5 minutes left for some questions. Let me have a look. If you have any questions, please feel free to drop them in the comments section. If you're watching that on YouTube, yeah, this is the way I would put it in, right? Like as much as it's as much obvious as it may sound, it's not really obvious at all. But if nothing bad happens, as an unpredictable, just like charts focus only, the charts tell you the bottoming process may be coming in, right? The risk to reward ratio is also favoring longs because it's basically the range lows of 2021 area. Then well, then this indeed might be the case. Guys, 2-3 minutes of questions. And while you're at it, kind reminder to hit a subscribe button, smash the likes, hit a notification button as well to stay tuned whenever we release that content and it comes out daily or most daily. You don't want to miss it. There's going to be a new podcast episode coming up with the big chats, just like I said, tomorrow. So you want to stay tuned. Hit a notification button as well, the bells, and questions. 29K. If those news that I'm talking about, like being unpredictable, like Russia decides to invade Ukraine or Elon Musk tweets something, some Fed changes the plan, then this may happen indeed. You need to be ready. Chart looks fine for the bottoming. I mean, it's not really perfect bottom. Perhaps there might be one more low swept, around $33,000, and just go right back above. But unless something like bad happens, I can see I can see Bitcoin rallying from here. I can be wrong about that as well, of course. Is it a good time to DC, or is it better to still wait a bit? Basically, from the major point of view, well, whenever there is extreme fear over the market, and this has been the case. I don't know why it's flashing women's shoes up here, but whatever. As long as it's in the bottomish part, of the fear and greed index, while it has limited predictive powers, it serves well as a barometer, for the sentiment out there. And the market has been depressed for the past 2 months. And usually, when you invest in depressed market after heavy breakdowns, you tend to get profitable on that sooner than later. So, in my opinion, it might be a good idea to DCA. Of course, not with the entire capital out there. Nice slippers. Oh, yeah, there you go. Appreciate it. Why did Luna dump so hard? Two last questions. Now, I think this is some sort of like a coordinated FUD going on. I didn't have too much time to look into the very insights of this. But, well, what did not dump hard in the past couple of weeks, right? So I think it's just regular dump plus some coordinated FUD perhaps. But who knows, right? Okay. Last question. How do you think the planned Fed rate hike in March will affect the market? Short term, probably sideways, downside, a little bit of downside, then sideways. Then usually it was followed in the context of 3 months following that rate hikes. Historically, has been proven to give some more relief to the markets. So short term, dump sideways, then probably upwards, a stronger medium time frame movement to the upside. Guys, I appreciate your tuning in. 59 minutes past. I appreciate your time you spent with me today on today's webinar, Friday's webinar. Before you go, make sure again hit a subscribe and smash the likes, hit the notification bells on as well to stay tuned. New shows coming up, new webinars coming up. Well, right tomorrow. If you don't want to miss it, make sure you stay tuned again with our YouTube account. This is only legit YouTube account we have. God bless you all. I hope you enjoy that. Stay safe out there. Stay positive, and see you on the next shows. Bye-bye.